Hi, you're watching Investor Insights. It's Wednesday morning, 7, the 28th of August. Market closed about an hour ago, and it's been a really exciting night. It's been very, very profitable if you were short the market like I am. So, the fears is military action against Syria, and that's driven WTI. It's just crossing $110 as I'm making this video. So the range has been about $4.50 to almost $5 move in the last 24 hours. If this holds, it will basically be the highest point in 2 or 3 years for crude oil. And as I've always said, oil affects everything. So with a basically 4% move, let's see how the RBA or the Fed's going to lie about inflation this time around with such a big move in this commodity. Gold also spiked, and last night when the US market opened, we saw the Aussie dollar dip a lot lower. The pound crossed 155 on the downside, and the euro went to almost 133. Good if you were short like I was, and I got out. You got to take profits when you see them, and they've rebounded quite spectacularly. The pound went from 154.80 odd back to almost 155.50, so that's 70 basis points move overnight from its lows. And the euro went from 133, what was it, 30 or 20 odd, back to 133.90, so that's about 60-70 basis points. The Aussie dollar went to 89.20 odd, and it's now almost 90, so about 60-70 basis points. I think the more important thing to look at are the reactions to this military conflict issue. What you got to take into perspective is what drives markets down is the unknown. And if you look back at history of conflicts, markets normally trend downwards prior to the conflict. And as soon as the first bombs dropped or the first bullets fired, you find that markets just explode upwards because the market just wants to see something. And this waiting and not knowing drives things down. You're going to find that when you I don't know how long it's going to take, but say there's 2 or 3 weeks of waiting and procrastination over whether or not to bomb the Assad government, whatever it is, I don't really care. You're going to find that these markets could lose 5-10 percentage points. Who knows? Don't quote me. This is just historical performances of the markets. So if you want to go long, you could be in for a long stay and possibly large losses. But technically I wouldn't be going long this market because it's overpriced. Enough said on that. You find that there's a lot of data which came out last night concerning the state of the US economy. And instead of making one huge video, I'm going to break it up into a separate news insights later on today. But everybody's happy in the US now. Everything is all rosy, but there's the issue of the debt, and more specifically the debt ceiling. There's an article which I'm going to discuss in the News Insights video later on about how America is about to hit its debt ceiling again. And this is the same story over and over and over again. If you are a country of just debt finance consumption, the end game will come eventually. And the end game will come when either inflation runs rife or your creditors just stop. When this is going to happen, it's going to be sooner than later, because the creditors can't just keep on throwing good money after bad. You're going to find that markets today will possibly trend lower, and as I said, it's more about fear of military conflict. Who gives a rat about the debt crisis right now, because that's not going to be the driving factor. You've got to look at market drivers, and in this case this so-called threat of conflict is going to override everything else. Me personally, I'm still short. I am still short the Aussie dollar against the US dollar. I'm short cable, I'm short euro dollar, but I keep very tight stops on them. So you gotta, when you see good profit, pays for the odd meal or trip here or there, it's worthwhile taking. There's several emerging markets which are getting hammered, and this is more the domino effect that I mentioned yesterday or the day before. As these folks have now got rampant inflation, and they're basically carrying quantities of US debt, it's easier to now be selling this US debt just to get money to spend, rather than keep on holding on to these worthless pieces of paper. I don't think that we've got about 3 hours until the Australian market opens. I'm gonna take a break now. Been up almost 48 hours. So we'll just take things as they come. If you were going to do something, you could always go long gold as more as of a direct result of the conflict issue and running to safety. But always keep in mind one thing with gold, and I always say this: gold is not really an investment. Gold is a hedge. Gold is like an insurance policy against inflation within your portfolio. So if you go too heavy on gold, it could be a real pain when this thing reverses. So it's always good to have a little bit of it, and during times of military conflict or the great unknown, it could be worthwhile increasing the proportion of gold in the portfolio. But in the long term, having a large proportion of your portfolio in gold or other commodities is playing with fire. And technically, it's all speculation. It's speculation because investing, or sound investing, is about the acquisition of assets. And by definition, an asset is something that pays you in the long term. Gold doesn't pay any dividends. Gold doesn't really pay you anything. Gold is only there to appreciate in value, or you hope that it appreciates in value over time. So holding it is not the smartest thing to do as a large proportion of your portfolio. So I'm gonna finally get some rest now. You folks have a good day. I'm gonna make there's some News Insights video in a couple of hours when I get up. But for now, have many happy returns and prosperous trading.